So recently I closed these trades, which was a huge about $2,100 and a nice boost to the account. So you can see here about $1,400 in profits and here about $700 in profits. And what was the secret? This candlestick pattern right here told me that a breakout was coming on these trades. And in this video, I'm going to walk you through the exact patterns that I use every single day so that you can start to read the charts like a pro, catch moves early, and grow your account with confidence. And I haven't seen anybody else talk about this on YouTube. And I've made hundreds of thousands from the markets and over $1 million in results between myself and my community. If you want a 100% free futures trading course, visit dantetrades.com/free. So let's just jump right into it. So now that we're here inside of the charts, the very first thing and the most important thing that you guys need to realize about candlestick patterns and chart patterns is that candlestick patterns and chart patterns by themselves are absolutely worthless. It means nothing, right? The thing that is most important and much more important is to view them in the proper context and in a proper structure so that you can make use of this. But just learning a bunch of random candlestick patterns and chart patterns, it means absolutely nothing. And it's probably the worst thing that you can learn as a beginner. And so what I'm about to show you is how to view candlestick patterns in the right context and the candlestick patterns that I look for in the right context. Because again, just looking for random candlestick patterns, it means absolutely nothing. So the context and the market structure is actually what is extremely more important and more key when you're going to be looking at candlestick patterns. So what I look for, and the thing that I look for is actually, I call it an inverse of volume node break and retest, or liquidity inverse break and retest. And if you don't know what that means, I'm going to explain it all right now. So the first thing that you want to do is you want to go into here. You want to look for the fixed range volume profile. And now that we do that, because I trade London, you want to start at the overnight. So you want to start drawing this at overnight. So that's 401. It's kind of hard to get it here, but that's 401 EST. So we're going to just do 401 EST, and we're going to drag that into 429. So 9:29 a.m. So this is the complete overnight market session, right? Because again, I trade London. So you want to just drag this into the appropriate times, which is going to be from market close into market open, right? So the market closed, the regular market hours at 4 p.m. So I started at 4:01 and then we drag it into 9:29 because the market opens at 9:30 EST, right? So for you guys who are brand new, and again, we're going to get into the candlestick patterns, but the thing that is most key is to look at things in the right context. So for you guys who are brand new and don't know anything about this, what liquidity is basically areas of high interest, areas of lots of buying, or areas of lots of selling. And this is where you just generally see very strong price reactions from these high liquidity areas, right? So when people say liquidity, that's literally all they mean. It's where there's lots of buying and lots of selling, and you usually see what we call support and resistance at these levels. So we have to identify these levels as they are key to looking for reactions at these levels. So that's why we look at the volume profile, right? And you want to look at these green nodes here, these green things. This is the actual volume profile, and you want to draw that across like this, right? So you want to look for these high volume node areas, right? So those are literally just these bars here, and where you see lots of volume, this is going to be a key level to pay attention to, right? So you just want to draw these boxes here, and then we can draw another box here, right? Technically there's a little one here, but let's just draw these two for now. So now that you can see that I've drawn these two high areas of liquidity. So again, what I'm looking for here is, as you can see, this big bar right here, this is a high volume area that we've identified. And you can see that this was a key area of resistance here. We tried to break through this area, and then what happened? We didn't break through that area, and then we had this rejection down here. But once we actually broke through this area, this resistance flips into a support, and then we push higher, right? So what I'm looking for is these key areas of liquidity to flip, that are acting as a resistance or a support to flip. And then once it flips, I'm looking for the candle pattern of the break and the retest to continue, in the direction, right? So as you can see here, this is exactly what we're looking for. We broke this level here, and then we had the break we had a break, and then we retested this zone, and then we pushed to the upside. So me, normally I'm a 1-to-1 risk to reward trader. So once we actually broke through this level with a really strong push, I would have put my stop, I would have put my entry right here, back on the break, because we broke and then we retested. So my entry would have been, again, if we look at this candle pattern, so you see, if we look at that candle, we have that long skinny line there. So when you see that, that just is telling you that the bulls tried to push the price down below this level, and then the price literally just got bought right back up, and they couldn't push the price down. So on a micro level, you can see that we broke above here, we retested this level, and then we continue. So most likely either my entry would have been here on this candle or on this candle, because on this candle we actually retest the level here as well, and then we push higher after that retest on this. So this is a better confirmation candle, and this will be a bit more of an aggressive entry. And as you can see, because I'm a 1-to-1 trader, usually I would have my stop either right under here if we broke under this level. So right under this liquidity level that we identified, or you could put it under this, the most recent swing here under this level. So in either one of these cases, this would have been a 1-to-1 trade, right? So this would have been a successful trade. And obviously we went up a lot higher than that. It's really easy to, it's really easy to look at that in hindsight. I personally don't think I would have actually been able to ride that trade all the way up to the top. But, and again, look what happens here when we come back down to this liquidity area. You see that we have a bounce from this level. We have a bounce from this level. And then once we actually close below this level, we have a break. So you can see the price breaks below. So I'm looking for that flip, right? So the price to break below, retest, and then enter, right? So most likely once we end it, let's actually look at the volume profile, how would it actually looked at that time too. Also, side note, I know this doesn't have to do with candle patterns, but when we are rejecting off the value area high, this is another confirmation that we're looking to push to the downside. So as you can see here, we are breaking down, and then we retest this area. So what would I would look for is for us to break and retest, and this is a confirmation. So I most likely would have entered on this candle. I most likely realistically would have entered on this candle because we break, we retest, and then we reject. So I most likely would enter here on this candle. And if we break above this level here, this is a logical level. If we break above this swing high area, which is also in confluence with value area high, then I definitely would want to get out of that trade. And then my take profit would have been at 1-to-1. And if we just let that play out here. So obviously we would have actually got the W there on that trade right here. And if you would have held that into market open, which I honestly would have not have held that to market open, but you would have, you would have had a much bigger trade on your hands. So I know you guys say like, all that is fine, hindsight is 2020. So let's go back to like the example of the trades that I showed you guys earlier when we started this video. All right, so if we look at the chart here, I have to just show you the screenshot here because the contracts have recently updated. So the levels and all the drawings and things are definitely not correct anymore. But this is a screenshot of exactly what I saw when I entered the trade. So you can see here, we have this high volume node that we identified, as you can see there, that I told you guys about. And then what happens here? And then this high volume node, this was a liquidity area that we were bouncing off of. If you actually look at the chart here, this one here, you can see like this area was an area that we were bouncing off of. So we were bouncing off this area, and we had a lot of liquidity built up in this area. So that's why I drew this on the chart. So you can see once we actually broke through that level, you can see we have this break, and then we retest the level, right? So again, we look for the patterns in context, right? Like if you just take random break and retest off a level that doesn't matter, you're going to get absolutely destroyed. But you want to look for, again, these things in the proper context. You have to know how to look for the liquidity levels. You have to know how to look at the market structure correctly. And then you look for these patterns and these kind of chart patterns. And for me, I don't look for every single, shooting star, doji, all this kind of stuff. The thing that I would tell you that you want to really pay attention to and look for is big bodies and long wicks. Those things are just really important, because when you see long wicks, that just means the price is reacting to a level. And if you see like a big strong candle like this here, you see this big candle where it's basically almost like a rectangle here. You see where it just opens and then we are just, you know, it just opens and then there's no wick and there's just a big body that just letting you know that this is a really strong, powerful candle, right? So big bodies and long wicks. But anyway, you see that we have that break, and then we retest that level perfectly, and then we just shoot to the downside. And that was actually my target here. Now me, I re-entered the trade on the, because I think I wasn't looking at the chart right here. I think I was doing something else, but I identified this level here, and I was waiting for this this kind of consolidation to break down. And if we broke back down, then I took the trade back to the downside to this liquidity level, and we actually hit, right? But this was actually a proper trade setup. This was the exact same trade setup, but I just took it the second time around, which honestly is a little bit lower probability, but it still worked out in my case for me. We made 700 bucks, right? And same thing for all the other trades. So these are just the chart patterns that we look for. And again, you know, I know a lot of these videos about like candlestick patterns and this kind of stuff are like really popular. As a beginner, as a newbie, I think that information is probably like quite literally the worst thing that you can learn is learning all these candlestick patterns, shooting stars, blah blah blah. I just think it's like absolutely super duper not important. And the more important thing is to understand the market context. And then once you understand the context, you can just pick one or two candlestick patterns or concepts that make sense to you as an entry model, and then enter based off those. But just the candlestick patterns by themselves, absolutely useless, doesn't mean anything. So yeah, so hopefully you guys enjoyed that. If this made sense to you, if you like it, make sure you subscribe. You go to dantetrades.com/free to get a 100% free futures trading course. It's a $200 course that you can just get it for absolutely free. I'm breaking down my trades inside of there. I'm breaking down to you guys the exact strategies that I use. It's literally just a paid course for free because I want you guys to get value and to like share my stuff. So if you like that, make sure again you subscribe, get the free course. Let me get your feedback. Let me know what you want to see next, all this kind of stuff. And that's it. I'll see you guys in the next video. Take care.